All right, y'all, back to work, boy. Sleepy trading day today, but it looks like that will change tomorrow morning because I see a couple clues on these charts in front of me that are telling me that a reversal is probably on the radar for tomorrow. In fact, I have two types of reversal patterns I'm watching for tomorrow. I want to talk about why I say that, why I'm looking for reversal. More importantly, though, I want to talk about timing entries, taking profit. I want to go over the entire game plan to make some money off these reversals for tomorrow morning. So very excited for tomorrow's trading session. Things should pick back up considerably on Thursday morning. Charts are ready. Enough of the intro. As always, thanks for tuning in and watching my videos tonight. Let's go make some more money on Thursday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I've got four important clues on the charts in front of us that are telling us where the money is made tomorrow morning. First clue is right here on the hourly time frame. I like to use the hourly charts as an overall directional filter. It's very easy to see right now the buyers have all the control on the higher time frame, both the S&P and the Nasdaq. I would also mention too, we've had a pretty big move over the past couple days ever since that ceasefire held from over the weekend. So it does look like I would love to get some pullbacks into some bear trap zones. So, we're definitely bullish overall right now, but I wouldn't be surprised if we see a nice, healthy pullback here tomorrow into the end of the week. That's one big clue for tomorrow. Second clue is over on the schedule for tomorrow. The calendar for tomorrow. Tomorrow is a busy Thursday morning. All four of these news events tomorrow at 8:30 Eastern time, they're all important. Durable goods, GDP, trade deals, right? Tariffs and trade, very important. But I would argue the most important report tomorrow is that jobless claims report. Because if you listen to Powell this week, specifically on Tuesday morning, one thing kept coming up during that testimony. In fact, one thing I think we all learned this week when Jay Powell's testimony was how important the jobs market is to trigger those rate cuts later on in the year. He made it very clear they were not really worried about inflation any longer. He made it very clear this week that once they start seeing the employment numbers start to collapse, or for example, the jobless claims start to spike, that will probably be, according to him this week, that will probably be the trigger to begin cutting rates in July and later on in the year. Now, the magic number right now is 250,000 jobless claims. That has always been a psychological level to measure kind of the health of the jobs market. We've been hovering around that number the last few weeks. So if we're above that 250K, or if we stick around that, that will definitely be a bullish clue, I would imagine, as traders will assume that Powell will have no choice now, start cutting rates in July. So a lot of news tomorrow, but the one event I'm watching closely is that jobless claims report, and that's, of course, on my radar for tomorrow. That's our second clue for tomorrow morning. Let's get back to our charts, though. It's good to know when the news is, but the money is made on the charts. Now, over the tick charts, we don't trade time charts in our trade room. Time charts, they're a lot more difficult. We trade tick charts every morning in our trade room. And by the way, if you're watching for the first time right now, that is a 7,000 tick chart. All the time frames there, upper left-hand corner. And that yellow line right there, by the way, that is the only indicator we need to find repeatable, consistent profits each week. That's the 21 EMA. This is where the clues come from to tell me that I think a reversal is worth considering for tomorrow. For example, one big clue right now is the separation off the moving average. Like when we're going higher, when those pullbacks separate like that, that's a very bullish clue right there. But now we're starting to see, for the first time all week this week, we're starting to see some separation below that moving average. It's even more pronounced on the Nasdaq. We'll grab that in a bit. Now, why is it important? Well, because separation tells me strength. Strength tells me another leg going lower. That's one big clue here on the tick charts. And of course, this trading range is a huge clue for tomorrow. Why? Because ranges are magnets. So now imagine going up into that high up top there and rotating back down again. I'll tell you, I love that reversal for tomorrow because, again, that range is a magnet. So one of the two reversals I'm watching for tomorrow is definitely a bull trap up top there. Now, I have two types of bull traps. We got to be careful because we're overall bullish. So I'm going to go over 2 types of very specific bull traps. We're going to cover that in a moment. But the second type of reversal is also down here, right? This, of course, is a prior range. Now, what do we know about ranges? We know that, again, we're overall bullish right now on the higher time frame. We know that anytime we break out, we know that breakout pullbacks are very, very common. So put that together now. If we know that that range right there is a magnet, we know we're overall bullish. I also love a beautiful bear trap. You might call this, if you're a student of mine, you might call that a slingshot reversal off of that low. Now, there are 3 different ways in which we can trade that bear trap, that reversal off that low, that slingshot reversal off of that low. Why don't we cover that a bit later on in this video? Let's first, though, talk about those 2 types of bull trap reversals off the high, because I love that trade for tomorrow. You know, for example, as we go back up to retest the high here right now, remember, we're overall bullish. Got to be careful. So one type of reversal pattern off the high is called a crown reversal. Now, crown reversals are very specific, so pay attention because we don't want to force a short in a bullish market overall. As we take out the highs, as we push up into those highs here, I'm going to watch how price reacts around the moving average. As we pull back, I want to see buyers commit, trying once, trying twice. This is the magic pattern right here. It's a lower low in price and a move just above that high. Here's the kicker though, without retesting the major high. Make sense? Okay. Then what I want is a strong red candle closing firmly below that 21 EMA, like I teach in the free video classes, and that is my crown reversal. It looks a lot like this one, but again, I want to get above that first high. That's the trick, right? Above that first high there, that's the crown reversal pattern I'm watching off the high. Now think about this. Where's the market want to go right now? That range below us, it's going to want to rotate. The amount above the range, the amount below the range, that could be a huge payday for us tomorrow morning. That crown reversal, double top reversal off of that high. But you know what though? We may not get that reversal. We may not get that primo crown reversal pattern. A lot of times what happens is, a lot of times we'll run up and there's so many buyers down here taking profit up there. There's so many sellers that enter at that high. We don't get the crown reversal. It just gets whacked right back down again. These V tops can be challenging because we're not going to get the bull trap up there. But if it V tops off the high, I'm going to shift my focus now and look for this new pattern. I'm going to find a trend line off that low. I'm going to mark that trend line around the high. Now, here's the kicker here. Look left. Find some prior swings, and the magic happens when I go above a prior swing off the top of that channel. Like I teach in the free video course, I want to see a strong red candle closing back below that 21 EMA. And again, this V top reversal, these are a bit easier on the emotions because momentum now is turned over. The challenge though is promise me, do not chase it going lower. That's the hardest part about these V tops. And again, the amount above, the amount below, that will tell us now where to take some profit, and we're going to look for that bullish reversal coming right back up ahead of us. Now, here's a big question though. What if I'm wrong about this? I mean, come on, we're bullish overall. We have that huge news report tomorrow morning. I wouldn't be surprised if this thing just rips off that news report tomorrow morning. So as we go higher, there are 2 types of scenarios I want to be aware of that will tell me that I'm wrong about that reversal. Before I dive into that though, let's slow down for a couple seconds because I can imagine if you're watching right now for the first time right now, this might be way over your head. Bull traps, add-ons. I know most guys watching right now, you guys know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy for you. Don't you worry though. I teach this entire roadmap in my free trading course. In fact, I have a ton of examples of crown reversals, V-top reversals, how to use ranges to cash some big paychecks. Guys, bottom line, the markets are way too good right now not to be making profits. So I want to help you guys make money with this stuff here. I'll I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up right there and take that free trading course if you're watching for the first time tonight, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. You're going to laugh when you see how simple that technique is. More importantly, though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, what are you waiting for, guys? Pause the video, hit that link that popped up right there, watch that free trading course. Everyone loves all the trade examples I include. I have a ton of examples, bull traps, bear traps, timing entries, all included in that short video series. The best part is it's completely free for you. Also, too, guys, keep in mind too, I'm going to put all the important links you need to learn the entire roadmap down below this video in the description of this YouTube video. Start first with that free video course. Most folks start making money all on their own, all from that video course. Start there first. And don't forget, I post a ton of updates, charts, and videos and minds and stuff on Twitter or X in between these YouTube videos. If you're on the X platform, give me a follow, guys. All my details, again, below the video tonight, description of the video. That way you guys can learn more about this, hopefully earn a lot more because of it. Okay, where we leave off here, I want to pit stop there and make sure everyone knows if you're watching for the first time right now. So if we go higher here, what would be a sign now that I'm wrong about that reversal? Well, first of all, a range up here. If we see, again, we got big news tomorrow morning. If we jump up and go into a trading range up here, remember, ranges will anchor this market going higher. This becomes a pretty easy way to make money. We're overall bullish, right? So it makes sense. We may not get that reversal, it may pop up into a range. Now remember, anytime we see ranges, we know that ranges love to rotate, right? Rotate the amount below, the amount above, and more importantly, if I have a previous range below me, yeah, breakout pullback, baby, breakout pullback. We love breakout pullbacks. Think about those prior highs right there, and let's use that breakout pullback now. Now watch closely here. I'm going to wait for the price to pull back below that trading range. I'm going to use a very simple bear trap into add-on combination. Pay attention real quickly. Bear trap. Bears try once. Bears try twice. Where are their stops? Buy right into those stops. A lot of examples of this pattern inside that free video course. Now, where's the market want to go? It wants to rotate, right? The amount below, the amount above. Now we know where this thing wants to go. Now we look to add to our position. To do that, I look for separation off that moving average. Like I mentioned over here, separation off that moving average. Once I see separation off the moving average, higher high in price, I want to get in right below that low. In our trade room, we call this a bear trap and an add-on. So again, if I'm wrong about the reversal, because again, there's big news tomorrow morning, if it pops up and goes sideways into a range, I'm looking for ways to use prior levels of resistance as new areas of support, trap the bears in, 1 try, 2 try, add to that position, and again, whatever you do, leave that runner up to that pendulum swing. The other variation of this will be a very common reaction to a news event is a pop and grind. For example, oftentimes we'll see things when news events come out, it'll pop up and start grinding, going higher. There'll be separation off that moving average. When that happens, guys, all we do now is we don't want to buy high up here. I want to buy low. And the easiest way to do this is to find a channel. Mark a trend line off the highs, bring that trend line down around those lows. And again, look left, right? Think about prior swings down here. What I would love to get is to use some of these prior highs right there, that prior high right there. That will give us the sweet spot. Get underneath that moving average, get underneath a prior swing. I can't emphasize enough how important it is to get in below a prior swing. That is always where the best entry is going to be. Combine that prior swing along with that low of that channel, and again, bear trap them in once, twice, trap those bears below that 21 EMA and squeeze those stops. Now, very important, pay attention. where is the profit target on a trade like this? It's always the breakout leg. Write this down. Anytime we see a range breakout, it's always a measured leg. So once we see a breakout leg, we know that's how big the measuring leg is. We then pin that right there. And that tells me now where to cash that final paycheck. Make sense? So again, if I'm wrong on this tomorrow, if we pop up and start grinding, going higher here, remember, don't fight that separation. And again, we're overall bullish. It would not surprise me at all if it pops up and starts grinding. That's why I want to have a backup plan here in case we don't get that short. That way you guys have a roadmap for that to make some money tomorrow morning as well. And again, remember, anytime we see a range breakout, the breakout leg is always a measuring leg. Like this morning, right? Range right there. No surprise. Breakout leg, measuring leg, right? This is not rocket science. It's always like that. It's always like that. Breakout leg, measuring leg. Okay, now we know how to trade this going higher for a short and for some long trades going higher. But I would say arguably though, one of my favorite trade for tomorrow is a move going lower. I mentioned earlier that on the hourly time frame right now, we're way high up right now. I would love a nice deep pullback to about the dip here. Let's cover that on the Nasdaq here, because Nasdaq's getting lonely over here. I see you NQ. I'm here triple Qs. Over in the Nasdaq right now, I love. Look at the Nasdaq right now. Look at that range right there. Look at that pendulum swing off that high, right? This is a beautiful area. That'd be a great spot for the reversal down around, what is that? 291 3/4. That whole area right there, that channel, my goodness, right? It's just begging for a pullback to get bought right up. Love that chart on the hourly chart. Now, as always, we don't want to get too far into the weeds on the higher time frame. I like to use the higher time frame mostly for direction. We'll go to the tick charts here in a second and talk about the entry tactics on the tick charts here. But by the way, guys, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe and make sure you hit the notification bell so you always get my videos in your inbox. I know we're all busy people these days. I appreciate you all tuning in and watching my videos every evening. So thank you guys so much for all the likes, all the subs. Thank you for sharing my videos with our trading buddies out there, all the support along the way. Now, I promise I'm done begging for likes here. Let's dive in right now and talk about those tick charts. The tick charts, and again, you'll see right away, right? It's a 4,000 tick chart. Now, why is that different? Because the Nasdaq is much lower volume than the S&P 500. The E-mini is much more volume, so it's slightly lower tick chart value. And again, the same 21 EMA. Look at the separation on the Nasdaq right now. That is a big clue, right? Again, we saw bullish separation. We saw bullish separation that gave the buyers a lot of strength. But now remember, anytime we see separation like that, we now know strong move wants to retest that low before we make that run going up and back to resume the overall trend. But again, look at the range right here. That range right there is a huge clue because now the amount above, the amount below, it's a bear range. It's going to want to rotate back down again and give us, hopefully, one of 3 different types of bear traps. We have a lot more choice of bear traps down there because we're overall bullish. And again, just like on the S&P, we have that beautiful range way down there. Looking lonely, right? That breakout pullback zone looks lonely down there at 333.5 area with, oh my goodness, what a great spot to buy the dip right off that area. And look right here, that range right there. Would anybody be surprised if the amount above, the amount below, would anybody be surprised if we just rip going lower and then whoop right? No, right? No one should be surprised if we take out any of these key areas of support down below. Now, I mentioned earlier on the S&P, going higher, right? The crown reversal pattern off the high, the V-top off the high. I spoke earlier about the bullish move up into a range up there, the pop and grind. Okay, so all the same stuff I mentioned earlier on the S&P can certainly be applied to NASDAQ as well. But let's talk about, though, as we go lower. So here's the problem. Even though we're bullish overall, and I love the idea of buying that area down there, here's the problem. We're going to be very bearish in momentum. In my trade room, we always call this rotation off the high. As we rotate from one side to the other side of a range, momentum can pick up very, very strong. So if we do see that run going lower, I need to anticipate that, yes, I do want to buy down here, but I have to anticipate though, what's going to happen is the underbelly of that range is going to hold. The sellers will retest that low before we resume the overall trend, which we saw on the hourly time frame. So if we do get this run going lower, I want you to anticipate a pullback, a retest of that low, and then that move going back up to retest the big high overhead. That gives me now two ways to buy it, because in all reality, we may simply bounce off that low and not get that. So let's cover these scenarios for tomorrow. So as we go lower here, the trick here is that same crown reversal pattern. So as we pull back to that 21 EMA, I'm not going to force the entry long. I'm going to wait for those bears to try once, let them try twice. And again, if I can get underneath that low, remember up top here, it was a lower low and a move above the high, right? That's the crown reversal off the high. Buyers want to buy low, it's above that high. As we go lower, it's the same pattern, but it's the opposite, right? So it's bears try once to go lower, it's bears try twice to go lower, it's a higher high, and move right below that low. And like I teach in the free video classes, it's that strong green candle closing convincingly above that 21 EMA, and that's your crown reversal. Makes sense, right? It's the same pattern, it's just flipped over. That's all it is, right? So one of them is a crown reversal off of that low. And again, don't be surprised here if we run lower and just whoop right back up again. If it V bottoms off that low, although I won't get the entry I want, these are oftentimes even easier, because now what I can do is, now momentum's turning for me now. I can mark off that high, I can mark off that low. Remember, what'll happen is it'll begin to grind above that 21 EMA. That'll be your signal, right? If it pops up and starts slowly grinding, separating above that 21 EMA, that is your sign now that buying, as we always say in the trade room, buying the first test is the best test off of that low. These are, there's no guarantees in trading or life at all, really, but that's almost a guaranteed winner right there. Because at this point, again, we're bouncing off key support, we're grinding higher. It's the first test off the low of that channel. That is a gorgeous, gorgeous long trade. Again, I would love to go down and bear trap down there, but if I don't get it, I have no crystal ball for tomorrow. I don't control these markets. All I can do is game plan the stuff that we are mentally ready to capitalize on no matter what the market gives us, right? We don't make predictions. We simply do different game plans. If we do this, we do that. If we do that, we do this, right? That's the way real traders make money. So a small variation of that. Now, let's face it, like I said earlier, we may run lower here. We may get a gorgeous crown reversal pattern off that low, but again, we may hold the underbelly of that low and make another leg going lower. Now, oftentimes what happens in these situations is something like this. It'll run lower, it'll basically break out of that trading range. We'll take that 21 EMA, and again, I don't want to buy too high because I got to be careful about the underbelly of that range holding. So what happened is, this one is bears once, bears twice. We'll get that nice bear trap going higher here. We'll take some profit off at the underbelly of that range. And again, hopefully it keeps on ripping, right? Hold that runner all backed up to recent highs there. That'd be fantastic. But the odds are pretty good though in that situation. They're going to try to make that run back down and take out that low. Now, what did we learn earlier on the S&P? The breakout leg. Yes, the breakout leg is the measuring leg. Once you know that formula, now we know anything between that low and again, breakout leg, measuring leg, this is the money zone right there. That's the money zone, right? It's the low and that measured move area. That is where bear trap winners live, right? It's the money zone right here. This is a horrible spot to be a seller because again, this will feel very bearish on the fast time frame, the 4,000 tick chart, but we're nowhere near a bear market on the hourly time frame. That is why we use the hourly chart as our overall directional filter. That keeps me kind of psychologically focused, not on selling right there, but now remember, on a retest trade, I can be a lot more aggressive. I don't need a crown reversal pattern now, because anybody who sells right there, where's their profit targets? At the low, right? At the measured move. So I can be a lot more aggressive on what we call a retest trade. Retest trades, it's a bear trap into an add-on. Bear trap, one try, two try, buying right into those stop losses. Do you see the difference there, right? The crown reversal gets in below that swing, right? A regular bear trap pattern gets in above that high. A lot more aggressive, right? I can be a lot more aggressive on the retest because now I know where that low is. I know where profit targets will be. I know where I can trap rookies chasing it lower. And again, if you learn one thing from me, when you start seeing this bear trap rip, don't just kick your feet up and start counting your P&L right now. Add to that position. I'll take half off on a one-to-one, half off on the one-to-one, and put another quarter back on when I add to that winner going higher, right? Targets up on these highs, leave that runner back to retest and high. If you're with us in our trade room, you know how much we love these retest trades. These are oftentimes our biggest winners because they fool so many rookie traders into thinking this is actually a reversal. But again, they're not seeing the forest because their face is right on the tree, right? This is a tick chart, a faster time frame. Anyways, off my soapbox. Now, one more thing you want to be aware of here. What if we don't get that strong run down? I mentioned earlier, that strong separation right there, we may only go back and take out that low right there. We may not get that full move going lower. So just be aware of that. Swing low right there, swing low right there. So one thing I do want to keep in mind here is I love the idea of getting that big pendulum swing all the way down. I love that idea. But you definitely want to be aware of, we may not get that big of a move here. We may only get that pendulum swing back down around that area. If this happens, what's my concern? My concern is I'm still buying relatively high. Whenever I'm buying relatively high, like I teach in our free video classes, there's one pattern I need to rely on, and it's a technical bear trap. It's a crown reversal pattern. So bears trying once, bears trying twice, again, higher high, same idea, right? Strong green candle closing above, right? So if we go lower here and all we get is that little move below that prior low, and again, same idea on the S&P, it's a crown reversal, it's a technical bear trap. I want to see the higher high in price, below that low, strong green candle, and let her rip back up to retest the high. If I V bottom off that area, it's the same exact game plan. Mark that trend line, find that channel, and whatever you do not miss that first test entry off the low. All right, guys, I'm getting excited just talking about this stuff with you guys tonight. Love the fact you guys stuck around all the way to the end of this video. Hope you learned a bunch in tonight's video. Hope you earn a bunch tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to come out and learn and trade along with me every morning at the opening bell. As always, I'll put all the important links you need to learn the roadmap. So definitely start first with the free video classes. Enjoy all the trade examples I include in the free video course. Then come join me in my trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And as always, be here next time. Adios, amigos. Bye for now.